Key insurance concepts. Group insurance funding formulas. Non-refund accounting. This is a fully insured plan where the insurer sets the premiums and is responsible for claims and administrative costs. If claims exceed premiums, the insurance company absorbs the deficit. The employer does not have to cover the extra cost. However, if premiums exceed claims, the employer is not entitled to a refund. This is the least expensive option for an employer. Retention/refund accounting. This is typically for larger groups and is a participating plan where the employer shares in the company's profits. The deficit is carried forward to the following year, and premiums may increase. Administrative services only, ASO. This is a self-insured plan used by large employers. The employer is responsible for all costs and sets the limits, while an insurance company or third-party administrator handles the administrative functions like paying and adjudicating claims. A major risk with ASO plans is cash flow, as the employer must have the funds available to pay claims, and the plan could collapse if they don't. Disability insurance. Occupation's role. The client's occupation is a critical factor in disability insurance underwriting. Certain high-risk occupations, such as a miner, may result in a client being uninsurable or facing higher premiums and exclusions. Definitions of disability. Own occupation. A policy with this definition will continue to pay benefits even if the insured person is working in a different occupation, as long as they are unable to perform the duties of their original job. Any occupation. This definition is very strict and considers a person disabled only if they are unable to perform any gainful employment. Benefits stop as soon as the person returns to work. Regular occupation. This definition reduces the benefit for every dollar the insured earns from returning to work. Residual disability clause. This rider provides a percentage of the policy's benefit amount based on the percentage of income lost due to a partial disability. For example, if a person loses 40% of their income, they will receive 40% of their policy's monthly benefit. Riders. Future purchase option, FPO. This rider allows a client to purchase additional disability insurance in the future without providing medical evidence, based on their income at that time. This is especially useful if a client's health deteriorates. Cost of living adjustment, COLA. This rider increases the coverage amount annually to keep up with inflation. Return of premium, ROP. This rider provides a refund of premiums paid if the client does not make a claim or has minimal claims over a specified period. This refund is not considered taxable income. Waiver of premium. This rider waives future premiums and refunds the last 3 months of premiums if the policyholder is disabled and not gainfully employed after a waiting period, typically 3 months. Critical illness insurance. Key illnesses. For exam purposes, the big 4 critical illnesses to remember are heart attacks, strokes, heart bypass, and cancer. Waiting periods. New critical illness policies have a 30-day qualification period. Additionally, there is a 30-day waiting period from the date of diagnosis, during which the policyholder must survive to receive benefits. For example, a person diagnosed with cancer who dies 20 days later will not receive coverage. Underwriting and applications. Agent's responsibilities. An agent has a duty of care to the insurance company. If an agent suspects a client is not being truthful, they should make a comment in the agent's comment section of the application rather than confronting the client. MIB, the Medical Information Bureau, MIB, is a central repository used by insurance companies in the US and Canada to share information on previous life insurance applications and claims. Underwriters check the MIB to identify potential issues like overinsurance or undisclosed health history. Policy in force requirements. For an insurance policy to be legally in force, 3 requirements must be met. The policy must be delivered, the initial premium must be paid, and there must be no material change in the policyholder's financial or health situation between the time of application and delivery. A rating or exclusion on the policy does not prevent it from going into force. Substandard risk. Insurers address substandard risk by using methods such as premium ratings, exclusions for certain activities or conditions, and increasing the waiting period. Discounting premiums is not a method used for substandard risk. Taxation. Corporate-owned disability insurance. If a corporation pays the premiums for a key person disability policy and does not treat the premiums as a taxable benefit to the employee, any benefits received by the corporation will be considered taxable income. However, if the employer pays the premium and reports it as a taxable benefit on the employee's T4, the benefits received by the employee will be tax-free. The beneficiary is the one who receives the money, not the person who is disabled. Recommendations for students. Read specific chapters and sections of their textbook, noting that certain topics will definitely be on the exam. The following are highly recommended. Funding mechanisms for group plans. Occupation classification and ratings for disability insurance. Disability definitions. Disability riders. Agent responsibilities. Critical illness and long-term care. Ethics and policy delivery. Creditors insurance. Residual benefits. ROP rider. Waiting and benefit periods. Taxation of corporately and individually owned disability policies. Group disability offsets. Creditors insurance. Group insurance. Corporate-owned insurance. Business overhead expense insurance. Long-term care insurance. Substandard risk methods. Coordination of benefits. MIB. Earned versus unearned income. Policy types. Waiting and benefit periods. Business insurance. Filing claims. SO plans. Group insurance. Funding formulas. Non-refund accounting. The insurer sets premiums and pays all claims. The employer doesn't have to cover any deficit if claims exceed premiums, and they also don't receive a refund if there's a surplus. Retention/refund accounting. For larger groups, this is a participating plan where the employer can receive a refund if the premiums are higher than the claims. Administrative services only, ASO. This is a self-insured plan for large employers where they pay the claims, and a third party, often an insurance company, handles the administration. A major risk is cash flow because the employer must have the funds available to pay claims. Group versus individual coverage. A key difference is that group life insurance can be converted to an individual policy within 31 days of leaving employment without medical evidence. Other group benefits like disability or extended healthcare cannot be converted to life insurance. Disability insurance. Underwriting. A client's occupation is a critical factor. An occupation with a high risk of disability, like a minor, could make a client uninsurable. Definitions. Own occupation. The policy pays benefits if you're unable to perform your specific job, even if you can work in another field. Any occupation. Benefits cease if you return to any type of work. Canada Pension Plan, CPP, disability. Requires a severe and prolonged disability. Riders. Future purchase option, FPO allows the client to buy more coverage later without a medical exam. Cost of living adjustment, COLA increases the benefit amount to keep up with inflation. Return of premium, ROP refunds a portion of the premiums if no or few claims are made. The refunded money is tax-free. Residual disability. This clause provides a benefit based on the percentage of income lost due to a partial disability. If a client's income is reduced by 40%, they receive 40% of their benefit. Reducing premiums. The most effective ways to lower a premium are to increase the waiting period or decrease the benefit period. Taxation. If an employer pays for a corporate-owned disability policy and reports the premiums as a taxable benefit to the employee, the benefits the employee receives are tax-free. Critical illness and long-term care. Critical illness. Policies have a 30-day qualification period after issuance and a 30-day survival period after diagnosis. For example, a person diagnosed with cancer who dies 20 days later will not receive a benefit because they did not survive the 30-day waiting period. Family history. Family health history is a crucial factor in underwriting critical illness and long-term care policies, and may lead to restrictions or even a decline in coverage. This is less of a factor for disability insurance. Long-term care. This is an important consideration for single individuals who may not have family to care for them in their later years. Business insurance. Types. Key person disability. A corporation buys this policy on an essential employee. Premiums are not tax-deductible to the corporation, but the benefits received are tax-free. Business overhead expense, BOE. This policy helps cover business expenses if a business owner becomes disabled. It is not necessary for someone who works from home with minimal expenses. Buy-sell agreement. A business agreement funded by insurance that allows for the buyout of a disabled partner. These policies are always based on an own occupation definition of disability, not any occupation. General insurance concepts. Application process. An underwriter can obtain information on a client's past applications from the Medical Information Bureau (MIB), which is a central repository for insurance history. Claim process. A claim must be filed within 30 days of the occurrence, and proof of claim must be submitted within 90 days. Creditor insurance. The lender is the beneficiary of the policy and receives the payment directly. This type of policy has a very strict, any occupation definition of disability. Earned versus unearned income. Insurers only cover earned income, which is money received for actively working, like a salary. Unearned income, such as trust income, rental income, or dividends, is not insurable because there is no loss when a person becomes disabled. When calculating a benefit, unearned income is deducted. Policy types. Non-cancelable. The insurer cannot make any changes to the policy or increase premiums. Guaranteed renewable. The insurer cannot cancel the policy, but they can increase premiums. Cancelable. The insurer can cancel the contract. Here are the topics you should focus on for your exam. Group insurance. Funding mechanisms. Study the differences and characteristics of non-refund accounting, retention/refund accounting, and administrative services only, ASO plans. Understand which is the least expensive option for an employer and the cash flow risks associated with ASO plans. Coordination of benefits. Learn how benefits are coordinated when an individual is covered by both a group plan and an individual extended healthcare policy. Convertibility. Know that a group life insurance policy can be converted to an individual policy within 31 days of an employee leaving the company, but group disability and extended healthcare cannot be converted to life insurance. Disability insurance. Definitions of disability. It is crucial to know the definitions of own occupation, any occupation, and regular occupation as they are central to disability insurance. Also, understand the definition of total disability under the Canada Pension Plan, CPP. Riders. Focus on the four main riders: future purchase option, FPO, cost of living adjustment, COLA, return of premium, ROP, and the waiver of premium rider. Understand what each one does. Residual disability clause. Know how to calculate a benefit based on a percentage of income loss. Underwriting and risk. Understand the role of a client's occupation in determining insurability and how insurers address substandard risk through premium ratings, exclusions, and increased waiting periods. Taxation. Be familiar with the tax implications of premiums and benefits for both individually and corporately owned disability policies. Business insurance. Key person disability. Understand that for this type of policy, premiums are not a tax-deductible expense for the corporation, and the benefits received are not taxable income to the corporation. Buy-sell agreement. Know how disability buyout insurance funds this agreement. The disability buyout policy for business owners is considered an own occupation policy, not an any occupation policy. Business overhead expense. BOE. Learn what this policy covers and who is eligible to get it. Critical illness and long-term care. Critical illness. Remember the big four critical illnesses for the exam: heart attacks, strokes, heart bypass, and cancer. Waiting periods. Be aware of the 30-day qualification period for a new policy and the 30-day survival period after diagnosis. Family history. Understand that family history of illnesses like diabetes or cancer can impact an application for critical illness or long-term care insurance. General concepts. Policy requirements. Know the 3 conditions that must be met for an accident and sickness insurance contract to be legally in force: policy delivery, payment of the initial premium, and no change in the insured's health or financial situation. Claim process. Understand the time limits for filing a claim and submitting proof of claim. Medical Information Bureau, MIB. Know that insurers use the MIB to check a client's past insurance applications and claims history. Earned versus unearned income. Distinguish between these 2 types of income. Disability policies only insure earned income, active income, not unearned income, passive income, such as from trusts or rentals.